Hello. Hi, this is Sunny Pathak. Today we'll go to discuss a very important topic, golden rule of accounting, or you can say there are three golden rule of the accounting. So there are the three golden rule means the first is real, another is personal, and the third one is nominal. So these are very important topic for entire accounting point of view. So you can see, so it has clearly written there, these rules are applicable irrespective on all the categories of the transaction. These three most talked about and the basic golden rules of accounting are to make debit and credit in accounting ledger by categorizing each and every transaction or entry into either. Well, so we'll go to discuss one by one. So once again I am going to revise: real, now there is a personal, and finally is a nominal account. So first, what is a real account? So like you can see in a statement has a clear written, real accounts is a set of tangible aspects of a business like furniture, cash, etc. So the word is here, okay, you have probably understand the tangible, the things can be touched. So real in the means the word itself says real, okay, the things can be touched, okay. So these terms are known as a means real account. Like we have given example: furniture, cash, building, computer, etc. So these terms are known as a, so okay, we will go for the more deep. If the item has belongs to the real account is coming into the business, when while making the accounting entries it should be written on the debit side, okay. Means if anything which comes in the business, okay, like it has a clear written here, uh, anything which comes in the business, so it is written in a debit side. Similarly, if the item going out, if item is going out, it is written in the credit side. So simple means the real things which you have, if comes in the business, it is written in the debit side, or if it goes out, it is written in a credit side. So the rule comes for the real account is debit what comes in and credit what goes out. We have seen in a statement also. So again the rule says debit what comes in and credit what goes out. So the real is over. So now move ahead for the personal. So personal, if a person or group of a person's legal body is receives something from the business, then debit the receiver. Look, if a person, here we are talking about a person, same group of the persons, maybe like if I say corporate members, okay, the corporate member means they are no collection of some persons, 17, okay, and many examples. So these are the group of the person. Same legal body, okay, legal body, they have existence in the eyes of the law, or they must be registered, okay. So these entity comes for the, so if anything receiving, if anything receiving from these category people, so where the debit is considered as a receiver, or vice versa, means if they are paying, if these terms are paying something to the business, so they become credit the payer or giver. So the rule comes for the personal account is debit the receiver and credit the giver. So once again, for the personal account the rule comes out to debit the receiver and credit the giver. So now move ahead for the nominal account. So nominal account, here we talk about profit and loss. If I say very simple is a profit and loss, or maybe expenses, losses, gain, these all terms are known as a nominal account. Like, so give for a statement here, nominal accounts represent all the expenses, losses, income, gains, you know the word says itself, expenses, losses, income, gains incurred while business. So we can see in some example like electricity is in expenses, telephone you may have in expenses, interest you may go to receive, profit if you go to sell something, definitely you usually have a purpose to get the profit on this. So here all the expenses or losses, there are two terms, expenses and losses, considered as a debit, or if you get any income or gain or profit, so these terms are known as a credit. So now the rule comes for the debit all the expenses and losses and credit all incomes and gains. So we'll go to be revise it once more here. If you go to be categorize, okay, the rule of the accounting, debit and credit. So now real account, personal account and nominal account. So real for, the real, if anything which comes in the business, the things can be touched, I mean a tangible thing. So what comes in debit, what goes out credit. Same you come for the personal account, the person or the group of the people or any legal entity, if they go to receive something, for that is known as receiver and the giver known as a creditor. For if we come for the nominal, all the expenses and losses in the terms of a debit or income and gain are in the term of a credit. So we can see some of an example here, like goods amounted to rupees 15,000 purchased from Mr. Mohan on credit. So yes, so if I talk about the first, goods amounted to rupees 15,000 purchased from Mr. Mohan on credit. So if you look at here, so the statement I am going to be received. So the account involved like Mr. Mohan, he bought something, the goods. The goods doesn't mean it doesn't have any specific name, so it is considered as a stock. Okay, so he purchased, it means Mr. Mohan. Mr. Mohan is a person, so the person considered as a personal account, personal account, and he he gave in the credit term. So this is the reason it comes in the personal and real account.